And start to
Good morning to one and all present here. Myself, Dr. R. GOWRI, belongs to the Department of Commerce with Accounting and Finance. Now, I am going to discuss about the topic working capital. So, what is working capital? In a business concern, funds are needed for short-term purposes for the purchase of raw material, payment of wages and salaries, and day-to-day expenses, etc. These funds are known as working capital. It is simply says that it is a part of the firm's capital which is required for financing short-term purposes. That is called as a working capital. Yeah. Definition of working capital. In the words of Subin, it is an amount of funds necessary to cover the cost of operating the business enterprise is called as a working capital. Now, we shall see the concept of working capital. And the concept of working capital can be categorized into two categories. One is balance sheet concept and another one is operating cycle concept. The balance sheet concept can also be subdivided into two categories. One is gross working capital and another one is net working capital. Gross working capital, that means it is a capital invested in the total current assets of the enterprise is called as a gross working capital. That means some part of capital is invested in the total current assets of the enterprise. What is current assets? Current assets are those assets that is used in the ordinary course of a business which can be easily converted into cash within a short period of time. Short period of time means normally for one accounting year, that is 1st April to 31st March. What are the examples of current assets? Cash in hand, cash at bank, bills receivable, sundry debtors, short-term loans and advances, closing stock, prepaid expenses, etc. Next one is net working capital. Net working capital means the excess of current assets over current liability is called as a net working capital. That means current assets minus current liabilities. What is current liabilities? Current liabilities are those liabilities which are intended to be used in the ordinary course of a business or paid in the course of a business within a short period of time out of total current assets or income of the business. That is called as a current liabilities. Examples of current liabilities are sundry creditors, bills payable, outstanding expenses, provision for taxation, etc. The working capital may be positive or negative. When the current assets exceeds current liabilities, working capital is positive, and vice versa. That means the current liabilities exceeds current assets, the working capital is negative. Next, we shall see the second concept, that is operating cycle concept. In this operating cycle concept, the cycle starts with the purchase of raw material and other resources and ends with the realization of cash. It simply says that it involves purchase of raw materials and other stores, and the raw materials and stores are converted into finished goods through work in progress, and the finished goods can be converted into can also be converted into sales, debtors, and realization of cash. That is called as operating cycle concept. The operating cycle concept and the period of operating cycle is larger, and the amount of working capital is also high. The period of operating cycle is smaller, and the period of operating cycle is smaller. The working capital is also smaller. Next, we shall see the kinds of working capital. The kinds of working capital can be broadly categorized into two categories. One is the concept and another one is time. We have already discussed the concept. Now we have discussed the time. Time of working capital can be broadly categorized into two categories. One is permanent working capital and another one is temporary working capital. What is permanent working capital? The permanent working capital is otherwise called as a fixed working capital. That means in the minimum level of current assets maintained by the company to carry out the business operation is called as a permanent working capital. It can be also divided into subcategories. One is regular working capital and another one is reserve working capital. Regular working capital means It is required to ensure the circulation of current assets from cash to inventories and from inventories to receivables and from receivables to cash. It is called as a regular working capital. Next one is reserve working capital. Reserve working capital means it is the excess amount over the requirements of regular working capital is called as a reserve working capital. That in the reserve working capital is also used for contingency purposes. That means in case of strike periods or lockout periods or rise in prices or depression periods, etc. Next, we shall see the temporary working capital. Temporary working capital means it is required to meet the seasonal demands and some special exigencies. That means contingency purposes. It can be further classified into seasonal and special working capital. What is seasonal working capital? The amount required to meet the seasonal needs of the enterprise is called as a seasonal working capital. Next one is special working capital. Special working capital means the amount required to meet some special contingency purposes or some special exigencies such as launching of extensive marketing or campaign for conducting research, etc. That is called as a special working capital. Now we shall see the advantages of working capital. Adequate working capital. It helps to maintain the solvency of the business and also maintain the goodwill of the concern. Loans can be easily arranged from banks and financial institutions by the firm for maintaining adequate working capital. It ensures regular payments of wages and other expenses, which raises the morale of employees. It helps to face the business crises in emergency periods. It creates overall efficiency of the concern. These are all the advantages of working capital. Next one is we shall see the disadvantages of working capital. In case of excessive working capital maintained by the business cannot earn proper rate of return on its investments. It may lead to unnecessary purchase, wastages and also losses. It gives rise to speculative transactions. It implies the excessive debtors, defective credit policy which cause higher bad debts. It may result into overall inefficiency of the concern. These are all the disadvantages of excessive working capital. Next, conclusion part. And the basic goal of working capital is to maintain current assets and current liabilities at a satisfactory level by the business concern. It is neither inadequate nor excessive. In case of inadequate working capital, may lead to the firm insolvency, and the excessive working capital implies that it is an ideal funds which earns no profits. So the working capital management policy of the firm have a great effort on its profitability, liquidity and structural health of an organization. Thank you.